Good, I'm back. I fixed it. Just some issues. Welcome Johnny P. Welcome Apex Predator. Just come back in, everybody. That's all good. I just had a bit of a technical issue there, but I fixed it up quickly because I do have an IT background, so I can't fix it. No one can. Right, so you're right. Yeah, it does. All right, so hopefully people find their way back in pretty quick. Otherwise, we're gonna have to delay for another 20 minutes. I'm kidding. So let's just wait at least another 2 minutes. Until this part of the song runs out, which is probably in like 30 seconds. That's not long enough, is it? Nah, it should be fine. If y'all want to be here, you should be here by now. Sorry, I had some technical difficulties there. All good. September 9, 2 days away from the anniversary of September 11. 2001. It's the same year the Chronic came out. All right. Enough with the bullshit. Let's do this. It's cool that I can play it. You can't hear it. All right. So welcome to another Ariaswave live stream update. It's an important update today. So I hope you're ready. I hope you tie yourself to the chair so you don't fall off it, just in case you do react to certain things in particular ways that may not be good for your health. So also please hit the like button because I had issues just before. So any likes that may have come through earlier were removed. Now, you may be wondering why this is called the important update. Can anyone guess? Can anyone guess why it might be called that? Like, does anybody have any idea what the deal is with that? I mean, sorry, one sec. I'm just going to tell my member that so can anybody Evan, you're back. I was just about to message you. I messaged my other member and somebody else. And yeah, okay, no worries. Johnny P says we're gonna dump. We're gonna dump. Oh my God. Are we gonna dump? All right, so this is important. Now, I've posted something on TradingView just now. So I did post it for the members earlier, and I did post my latest recount of Bitcoin yesterday. All right, so it's not hard to understand if you've been following, but I went back and I redid a whole recount on Bitcoin because the latest move down in XLM did not fit the structure that I had been anticipating at all. It did not fit it at all. So once I cross a certain threshold of trade-offs, making trade-offs, because sometimes you need to make trade-offs in the waves because it's so complex. You can't make any more trade-offs anymore. So you have to go back and reanalyze the whole Bitcoin chart again from scratch. And I hadn't done that for a while. So to me, the biggest realization was that the corrections are sharp. And I do teach this, and it is on my welcome, Mike. Good to see you here. It is on the program that I teach. I do teach about this, where corrections can look like zigzags, even though they're not what are commonly. I suppose Elliott wave tries to explain it as a complex zigzag or something like that, but it's just wrong because it doesn't actually help you understand what the deal is with the waves. So, yeah, so Elliott doesn't have the framework to accurately outline the price action in a way that is objective to the point where you can use it accurately to define the end of an actual correction. You can't. That's why I developed Ariaswave, is because you can actually determine the end of a correction. And when something doesn't fit the pattern, then obviously it's not part of the pattern. And then you go back and you find out why. And sometimes when you're in my position now where I have members and, this has been going for a while now. It's actually been going for a lot longer than I've had TradingView. It's been going for like 6-7 years, probably 7-8. But you start, like, I have a photographic memory, so I can basically remember a lot of waves and a lot of previous thoughts about the waves. So to me, it just comes back to, well, what are you going to do now? What are you thinking now? And it's really hard to tell yourself that, like, you shouldn't treat yourself that way, right? You should treat yourself like, okay, well, with your experience and your knowledge, what do you see now? Because now you have more experience and knowledge than you did last time you looked at it. Because I don't look at it every day. I don't look at Bitcoin charts every day. Why would I do that? Right? I'm an XLM fan, but that's not the point. The point is that you can't look at long-term charts every day, because after a while it gets boring, right? And also you need time in between to actually have a rest, because the more you do it, the more you're going to try and invent a scenario. So to me, I know the importance of not looking at a chart for a good period of time. And then when the waves call it to you, like you're called upon to look at it, you can actually be useful rather than just be bored and say, oh, you know what, I've looked at this many times and I've made this conclusion. And no, you need to be open to your own experience. You can't just say, you know, hell no. I've looked at that before. Last time I looked at it, it said this, right? You can't think like that when you're an analyst, a chart analyst. You can't, because you need to understand that every time you look at a chart, you gain valuable experience and valuable knowledge, especially if you understand what Ariaswave is, right? Especially if you know Ariaswave and what it is, right? You will gain valuable experience. And then when you go back to another chart that you previously looked at, it'll look different. And that's really cool, because that's what happened to me. And it happened this time, like in a big way, right? And what it told me is that this uptrend has not finished yet. It's not over in Bitcoin. In fact, if I told you the number that is the target for Bitcoin, you would laugh at me. You would literally laugh at me, because it's in the millions. And that's only for wave 3 that started in 2010. It's in the millions. Okay, I'm not going to tell you how many either, because that's even more stupid, right? And nobody would believe me. So I'm not going to say it. To me, it's more like, let's just expect a pretty big run from here. There's going to be a lot of QE and stimulus and hyperinflation to jack up this market. But first, I need to point out a couple of things, right? So the first one is that I did a recount, and my latest recount on Bitcoin and XLM is a 1-2 pattern, right? In Bitcoin, it's a 1-2-1-2 since 2018. In XLM, it's a 1-2 since, well, just September last year, right? So that particular count, I don't know if you've seen it, but I will actually switch to that chart now, because I think it's about time that I did. Okay. Now this is on the idea I just posted just now. All right. Now I'm just gonna share. What the hell? Screen 2. It's not screen 2. Fair enough. Screen 2. All right. So check this out. This is the potential scenario for XLM. Okay. Now, as per my idea I just posted, this is the make or break area. Okay. So that means that if the red line's broken, it's probably going to 10 cents. Or if B, the magenta line is broken before the red line, which means the red line is not at all broken, then we're going straight up. But the problem is that we haven't seen the crash in the stock market yet, right? And if we haven't seen the crash in the stock market yet, and it's supposed to happen and cryptos are about to take off, then when will the crash happen then, if cryptos are about to take off? Are they going to happen next week, next year, next month? I mean, it's going to happen now, right? And that's the problem. That's the problem. That's the whole point of what I'm saying here, right? So if you can understand what I'm saying, then you will sort of start to fathom the deal. So who here has seen any of the ideas? Please let me know in the chat right now, so I can get a bit of a feel for some numbers here. Who's seen any of the latest updates? Whether you remember or not, doesn't matter. Just put it there. Anybody? Has anybody seen any of my latest ideas about what could potentially be going on right now and what could potentially happen if we keep moving lower. Has anybody seen it? Let me know. Mike, yes. Thank you. Thank you. Apex Predator's seen it. All right. So a couple of people. Good, good. No worries. So a couple of members as well. All right. So the deal here is, and members will know why. Matthew is chiming in with, we are looking at selling at the end of wave 2 correction. Well, it's yeah, we're selling into the end of wave 2. It's still not finished yet, is what I'm saying. Is the potential case here because of, you know, well, logic really, because how the hell are we going to have a crash if it doesn't happen now? It ain't going to happen, right? But we know it's going to happen, right? So yeah. So okay, welcome, Luca. Good to see you. Excellent. Mike, Jesus Christ. Look, I left it up to the members to decide for themselves, and you know what? Pink Panther style. All right, no worries. Okay, so look, it's okay if you decide to do that. It's up to you how you do this, but you have to understand a couple of things here. So let me go to the NASDAQ for a second. Okay. Now, this is probably the wrong chart. It is the wrong damn chart. That's right, because we're not looking at our. All right, damn it. I have to switch to my TV chart. 1 second, please. Whilst I bring up my proprietary information that you shouldn't never get to see. I'm kidding. Well, I'm not kidding, but still. Yeah. So basically, it goes a little bit like this, right? I've been telling people that this is the top. Okay. Now, I haven't been saying it in those exact words, but I've been sort of insinuating that this is, you know, it's basically wave 5 is the same length as wave 3. Wave 4 is overlapping with wave 2. Wave 1 is the shortest. I don't know what else to say. So when it hit that target, which mind you, I put that green dotted line there before it hit it. All right. And look what happens when it hit the green dotted line. Okay. Check it out. Look what happened when it hit the green dotted line. Right. And I swear to God, I posted this around here somewhere before it hit the green dotted line, and it started having a spasm. Right. It went a little bit like this and a little bit like that. And check it out. I mean, why is it doing that? Okay, can we see a correction in here? I don't know. Maybe there's one more sharp move and then it's just going to tank. I don't know what it is, but something is brewing on the NASDAQ. We don't know yet. Okay, now it's just started in cryptos. So don't get overexcited, but at the same time, I'll explain to you something in a sec. Welcome, E. coli. Good to see you. Actually, E. coli, there's been more updates since then, and it's been pretty drastic. So you probably haven't caught it yet. You may need to watch those. There's been a recount on Bitcoin, a complete recount on Bitcoin, which influenced XLM as a result of XLM's latest move down. And I'll retouch that on that in a sec just for you. But welcome, new investors. Good to see you. So, okay, so that's the NASDAQ. What about the Dow Jones? Okay, now this one is actually getting interesting. because it's broken an important trend line, which I did post recently in my market update, saying that it has to go up, make another high, and no, it decides to just break my trend line. Okay, so that's a sign. So maybe my original count was right, but that was wave 4 and that was wave 5, right? But this correction here is somewhat, you know, a little funky. So let's not jump to conclusions just yet. It still might be right. There may be one more little push up, but that's the interesting part of all this, right? Is that something is going on, okay? It's slipped out of 2 trend lines. Number 1, my AE trend line's broken back here, right? So I'll change colors of the trend line so you know which one's which. So my AE trend line is the green one, okay? So it's not supposed to break out of that trend line, but it did, so fine. That's weakness. And then you've got the C in brackets trend line for 1, 2, 3, 4, 5. And now it's slipped out of that. So this market is so damn weak that I cannot explain it to you. Okay, it's literally wilting like a dead rose, and it's not looking very good. It's also looking a lot, when you got the flat top, right? You got your 80s flat top, 90s flat top hairstyle, MC Hammer style. Exactly what happened back here, similar to what happened back in, you know, around February last year, right? Okay. So you got that sort of that rounded edge where it kind of like looked like it was supposed to keep going, but it kind of just wilted, right? This same thing is sort of happening now, in my opinion, but we've got a broken trend line. So it's looking to me like, okay, not looking happy. I don't normally show this market, but I'll just quickly switch to the ASX. Here in Australia, good old Australia, it's not looking too happy either. All right. So just so you know, it ain't looking too happy down under. All right. So I reckon that's a sign as well. Okay. Yeah. So something is not quite right in the markets. Okay. Now we know how quickly markets can suddenly turn around and dump. But the thing is, I'm not just using the markets to try and predict this stuff, because I'm already expecting that to happen. I've already done a billion ideas on the Dow Jones, right? So for me to do a billion more is stupid. I don't need to. It looks done. It's cooked. D-Wave done. E-Wave done. In progress. All right. So let me just outline something to you before we continue back to the crypto and some more talking. I'll take you to the DW chart, right? The DW chart. Now this chart's pretty important, right? And I show it to my members usually only. But I wanna hang on a minute. Is this the right chart? Have I made a mess? God damn. Yeah, I don't know what in the world that is. I didn't do that. It wasn't me. Sorry, give me a sec here. I'm trying to get the right chart going. All right. All right. So for all those that don't know, 1987 was an E-wave. Okay. Mind you, I go back to the Great Depression. So if you're feeling a little depressed, there's one for you. It was an A-wave. Right? If you think that's a 5-wave move, go back and look again. C-wave 62, very small. Right? He had a small PP. Actually, it was a CC. You like corn chips? I do. All right. So E-wave, that was the largest one-day crash in history of markets. It was Ewave in 1987. Okay, a bit of history there. In 2009, we saw an Ewave, which marked the end of the green wave too. Fantastic. Now, the problem is we haven't seen the latest Ewave occur. So I'll give you one guess what's coming next. Just one guess. That's all you're going to get. All right. If you can't get it, then you shouldn't be here. I want you to use the right stage exit, not the left, because that one's being taken right now. So I'm sorry. All right. So I think you sort of get where I'm going here. Something needs to happen first before we go higher, before we make a move up, before we say, okay, the bull market is active, all in, all boats, full steam ahead, right? So if you just use your logic and use your brain, do markets ever go up in a straight line? No. You have to wait for the correction to complete first before you expect that to happen, because then it will go up in a straight line. Okay? Yeah, it will. But it won't go up in a straight line before the correction is over. And this correction is not over. Okay? All right. Sorry, excuse me. So if you look at this chart and look at my lovely channel, right? Now, isn't it a lovely channel? Okay, it goes from the Ewave 2009 to the Ewave 1987. Oh, look, it keeps going back all the way to the Great Depression. Oh my God, how did I do that? It's not hard. You just need to know Ariaswave. Simple as that, all right? Where did I even start channeling that from? Well, it appears that I channeled it from that Ewave to this Ewave. That's all. And it told me everything else that happens, right? Now, look, the price fell out here and then it went back in. See that? That's interesting too, because that happens, okay? Just in case you didn't know, that happens. And that's good to know as well. Black Swan, says Johnny P. I reckon you could be right. So Black Swan, Afghanistan, Delta MU variant drop for E. Now, interestingly enough, markets tend to drop to the previous fourth wave, typically. So in this case, that would be around, you know, the trend line area and the top of the previous wave D. Now, isn't that interesting? Isn't that, how much of a percent drop is it from here, would you say, to the yellow line? It's only 58%, all right? Just relax yourself. It's just 58%. It's not a big deal, okay? It's not a big deal. If you go to the red line, 55%. Okay, 3%. Nobody cares, okay? So, interestingly, you're right, Johnny P, and that's what I'm trying to say here is that it's only 2 days away from the 20-year anniversary of the Twin Towers collapsing, right? Now, if you ask me personally, I reckon the first tower collapsed in 2009. Right? Now, the second tower is going to collapse in 2021. Ah, interesting, huh? Twin crashes. That's how crazy I am. So forgive me for being crazy, but there's a lot of interesting things that happen in markets which really resonate with me, and I think that nothing happens by accident. Hint, hint, wink, wink. And I think we should all be very careful about our investments and learn the waves. Try not to worry too much about it, but something could be happening soon. Okay, so enough on that. Let's go back to my TV chart. Well, that's just absolutely silly. When did I do that? I don't know. So let's go back to the XLM chart, 5 minute. Let's go to the 5 minute chart. Let's have a look at this. Let's just really start to not freak out right now. Okay, it's all good. Relax. Take it easy. Mike's already left the building. Not me, the other Mike. Morning, Pete. Good to see you. Welcome to the live stream. Hopefully you've been watching those videos. Right, so for E. coli, I want to really just highlight this point to you. Actually, I'll do it on this chart. No, actually, yeah. Okay, far out. Okay, so let's do it on this chart quickly for E. coli. This is the new count, and I'm not going to go into detail here. You have to watch the videos later. Basically, wave 2 ended here in September 2020. For XLM, we made a 1-2 pattern. Actually, we're still making the 2 pattern. And that's what I'm talking about now. Potential crash, incoming. When do you sell? I'll get to that in a minute. But interestingly, 1, 2, 3, 4, 5. Previous 4th wave is here. Therefore, potentially, this could be a target for 10 cents. Okay. Now, if a big crash did happen, I would expect nothing less or nothing more than 10 cents. It can't go below 0.06, and I don't think it's going to go near that. I think the 10 cents is really going to be like, you better have your order in because it's going to hit it and it's going to bounce. Okay. Now, it might hover a bit first, but it's going to hit it. I reckon it's going to hit it hard. And as I mentioned in my previous couple of videos, I don't care about sharing this, right? I really don't care with explaining this, but let me put it this way. People look for zigzag patterns, okay? Because they're one of the most common patterns in the markets, right? Now, according to Ariaswave, that's true. According to other people, that's true. And according to other sources that I may have encountered at some point, that's true. So in this particular case, you're looking at people who don't look at markets in the Ariaswave perspective as such. They look at it in a different kind of way, right? And we're talking big traders, like big institutional traders and such, right? They look at the market in very simple terms, right? It's usually a profit-making term, obviously, but if they were to look at this market right now, they would basically take a fib to the lows and basically wait for a certain pullback to happen and then sell it for a similar length to the first move down, right? And at this point in time, a 50% move is absolutely perfect for that. But in this case, what was that? It was actually about 0.38. 0.38. Now that is crazy. That is like just a little bit lower than 50%. Just like almost 40%. And it hit the 40% mark there. Let's just zoom in a little bit. It hit that 40%, which was a confluence with another retracement in the opposite direction, right? So there was an area of resistance there. And if you can see my little dotted line, it's also intersecting at the same point. right? So that there was crazy resistance. Boom, it dumped, right? I don't know why, but it just happened to be that the dotted line was exactly at that same point from the top to the line, to that area right there of the retracement. Obviously, I drew that line after the fact, but look at it. I mean, what that double layer of 50% and 0.38%, 40%. I mean, you've got people here who are trading these moves, and they're trading them basically putting their stop up the top here and just going for doubles or triples. If they can get triples, they're happy with that, right? But we don't do that here. Well, we can, but that's more advanced Ariaswave stuff, which we'll get into in the future if you're a member. But first, you need to learn the damn waves, okay? And I know my members, they're good at that, and they like to do it, but they need to do more, okay? Because there's a lot of stuff to learn when it comes to these kinds of patterns. So, oh no, Greg, good to see you. Good move, Greg. Good one. Excellent. I recommend that you do that until after the crash, not after the weekend, though. And you know what? I hope your sick wife is getting better. I remember you telling me about her about 10 live streams ago. So thank you, and all the best. I send my good, vibrations and good wishes, the best wishes. So stick to the process, please, everybody. If you're a member, you know what to do. If you are Mike Mayo, just keep at it. Good one. So if we want to go in closer again, so I want to explain something to you. 1 second. Okay, so after we had a crash, a mini crash, a lot of you might be thinking, well, it's okay, it'll bounce. It'll bounce. But the problem is that it hasn't bounced hard enough yet. And no doubt it will bounce. So to me, if I say this is a 5-wave move to myself to hit the 0.618 retracement, in reverse, it's still an area of importance, right? Just like up here, when it hit the top here, it's also an area of importance, right? So you have to understand that the fibs do work if you know what the wave count is, okay? That's important, that part, okay? The Fibonacci retracement does work if you know what the waves actually are. Because if you don't know what the waves actually are, the Fibonacci's are just like pixie dust, like without the pixie. Basically bullshit, right? It doesn't work. It's just some bullshit that people use because they like to measure stuff. And a lot of the times they come up short. You like that one? Anyway, so what I'm thinking right now is that if you don't know the waves, you're practically going to sell or do of one of two things. You're going to either panic sell when it breaks the low, or you're going to sell now, like Mike, or you're going to wait for a pullback that could potentially go a little bit higher. So how do we know which one to do? Well, if you pay attention to the waves, you'll understand that this here is the suspected low of the first A wave that occurs in a bounce that should technically go back to the level of about, the same length as wave A, which is about, actually, I've already measured it. So I'll just tell you, it's about this area here. Hang on. Let's just use the line, make it easier. It's about that long. Okay. Now, in my honest opinion, markets never make it easy for you to do anything, right? So for those people who think that this is going to go lower, the market will probably do something to make you think it's going to go higher. But then if you look at it in reverse, for those who think it's going to go higher and see it go higher, they're probably going to go long or longer, and then something else will happen. And that rest of that could be happening very fast. Okay. It might happen very fast. And I mean, the rest of the correction can happen fairly quickly. As we've seen in my previous examples, especially for the members who know, when the A wave is the largest, the rest of the correction tends to unfold fairly quickly. So this is why I have to redo my idea on Bitcoin, because I suspect there's something a little bit more going on there than what I thought, which is not much more complicated, but it's definitely something that I need to work on a little bit more, because I feel that it needs more attention that I've given it at the smaller degree, at the recent May this year to now. Before that, I've already done the work. But from that point on to now, I think that there's something I've missed. So I'm going to go over that soon, hopefully over the next 12 hours, 24 hours. Welcome to the live stream, Chemistry. Good to see you bringing yourself back online again. Excellent. We are looking for a correction here before we either continue higher or make a big crash dump to the downside due to the forces of nature basically coming into alignment. And there's a lot more to it, but you'll probably need to rewatch stuff if you haven't seen it, or my ideas that I've recently posted. So that's pretty important stuff there that you should check out. So yeah, in a nutshell, that's the big deal right now. Okay, that's the big deal. Now, just for shits and giggles, let's have a look at the TNX chart, which is the bond yield chart. Now, this particular chart I've been looking at for a little while, and this is interest rates. So I've probably got the wrong chart again. I do. Jesus Christ, what's wrong with me? All right. Okay, here we go. So yeah, this is the same deal here. We got a 1, A, B, C, D, E. And you know what? If this breaks above that line there, we're going to the moon. Interest rates to the moon. Hyperinflation to the moon. But it's also interesting to note that if we're expecting some kind of move down, wait, wouldn't that mean that the interest rates would, what would they do? That's a good question. It appears that they've bottomed, but maybe they would shoot through the roof. Maybe this could be a catalyst to what's coming, right? And if they did do that, I don't know about that. That sounds a bit far-fetched, really, doesn't it? Does this look more like an A wave? Does this look more like a zigzag? Yeah. That's an interesting possibility. This may not be the correct labeling here. We may not have seen a bottom. And only because if we dump here, right? Remember what happened in 2009 when we had the Ewave, right? In 2008, 2009, we dumped. Okay. Now, around, that time, we dumped. What can I say? Like, oh my God, the US Treasury is in danger of, I mean, how could Janet Yellen say that they're about to run out of cash potentially without anybody freaking out at all? Just, yeah, it's fine. Just running out of cash. How about you call the Fed and print some more? Come on. You know what to do. Come on, get with the program. Why would you tell that to the public? It's just to cause fear. They're literally plotting with Afghanistan and, the Delta bloody WRX variant. I don't know. Like, to me, it just seems crazy. They're just coming up with all these different stories to just, make everybody all crazy and stupid. And, let's just have another crash. Why not? Because we need it. We need another crash so we can print more money and then just keep going higher. Because this is just how we act as humans. We're all this way. Okay, let's just do it. Come on. There. Let's do it. Pump it. Pump it. Pump it. Louder, like why? Why do they tell us this stuff? Why do we need to know that the US Treasury is running out of money when they control the money press, the money printing, the repo market, the interest rate, the bond yield, the bond buying, the bullshit, right? Why do they tell us that? Why do we need to know? It's because they're trying to put the fear in. The fear trade. Well, it's not a fear trade. It will be a panic selling, that's for sure. But I would be careful, extremely careful, to assume that this is correct. But if it is correct, then I have a feeling that we could possibly see it go really high. Okay. Because instead of doubting yourself sometimes you just actually need to be a big boy and say, you know what, we might be ready for action. Now, when you think about it, if 20% interest rates is about here, and this is a 1-2 pattern, I don't know, man. Something tells me that we might see a little bit higher than just that. I could be wrong. I could be completely wrong. We might see a weak wave C, but there's definitely going to be a wave C coming here. You can see, members can see the color of this C wave in brackets. They know what I'm talking about, right? Now that started in 1440 AD, 1440 AD, that pattern, right? You know that? So I reckon it'll just go to where it's meant to be, and it'll basically collapse a few things in the process, no problem. But I think that that's called hyperinflation. Okay, hyperinflation. It's no bullshit. And you know what? And you know what makes this okay, right? Now, what makes this okay is that, number one, the 10-year bond yield is at 1.333 right now. Okay, if you like repeating numbers, there you go. Eat that one up. Put that in your computer system. Interest rates are at 0%, but why is the bond yield at 1.3? right? There's a little bit of wizardry that goes into how they manipulate the bond market and interest rates, right? If you check out the tips market, or if you even do a little bit of research, real interest rates are basically negative at the moment. So the bond yield doesn't really reflect on real life at all because of the level of manipulation that is going on behind the scenes. So in that case, what they will need to do in order to pump everything up to heaven and back, well, not back, just to heaven, is to keep printing more money. So what's that going to do to cryptos? It's going to send even a 10-cent crypto to like numbers that they're basically eye-watering. They're eye-watering because of the value of the fiat currencies going down the toilet, completely down the toilet, compared to real assets like gold, silver, digital assets like, cryptos, all that sort of stuff. Look, I can't really tell you if real estate will continue, but if they keep doing this, I think that there will come a point where they will put the pressure on real estate prices because the pressure will be mounting the whole way. Does this mean that there will be a potential massive, huge crash in the future? Probably going to be, but the prices will be so elevated at that point in time that the correction will be minimal or insignificant potentially. And that's what I think is the key here, right? I think that's the key here. The key is that they have the power to manipulate such a sea wave that it would blow the socks off a market that didn't have the level of QE that we have now. But because we have the level of QE that ain't going to end, it's going to continue, then you could see bond yields rise. And all it would do is create hyperinflation because the amount of money supply they would have to support to keep it going, if you listen to people like Peter Schiff, he's right, but at the same time, nobody's going to pull the Fed up on their practices. No one's going to say shit to the Fed. They're just going to keep doing what they're doing, and they're probably going to just increase what they're doing because nobody, and it's been proven, right? Ask people to put a mask on. How many people say no? Well, I do because I have an exemption. But how many people just say, yeah, I'll I don't want to get in trouble. I'm just going to do what you say. I mean, it's all just by design to see whether you will comply. It's all done that way for a reason. And they've done enough tests to know that you will comply and you will be a good boy or girl. And I think that's what they're betting on, and I think they're going to win. And the way that you can benefit from this is to pile in to all these assets, digital assets especially, because they are going to go through the roof, not just because of what they're doing, but also because of what they're going to be used for, their utility and use case. I did say before that utility and use case wasn't going to mean anything until the correction was over, but that's when I had the old count. So now that I can see that basically we're going to continue moving higher on, these assets, then I have no reason but to think that, you know what, this is only just the very small beginnings of a really extremely huge, massive pump that will practically take this thing up way higher than you think. All right. So if you don't think that's possible, that's fine. Don't worry about it. Don't buy it. Who cares? Sell it at 350, right? Who cares? Do what you want. But the analysis and the evidence behind what I'm saying suggests that all this wobbly shit that's going on now, hang on, this is a bit wobbly. Hang on. There we go. Is actually going to end with you either with more XLM or less XLM. I don't know. It's up to you. And then it's just going to take off like a freaking rocket ship, literally, because of what's going on in the markets, right? Do you think that they're going to be able to save the world by just printing less than what they have been over the last few decades? No, they're going to have to probably print more than the last few decades in just a couple of years, right? And that's including from now back. And you know that the last year is being more than the last few decades already. So if we're including last year as well, yeah, that's how crazy the hockey stick's going to keep going higher. So is it really, I always say this, I always ask this, is it really that the asset prices are going up or that fiat value is going down? Now you answer that question, you be the judge. Okay, so I need to leave that one up to you. I can't answer that for you. That's something that you need to think about. All I can do is lay out the roadmap for members, especially for public. Well, I'm telling you the deal, whether you accept it or not, it's up to you. But you can't say that I don't at least inspire some thought in you. Because if what I'm telling you is true, then literally at 10 cents, you've got this tiny little gap since the trend started. It's about this small, roughly. That will be the difference between, actually, you know what? Let's just take it down to March 2020. Right? You've literally got this much area that you're missing out on compared to if you bought it in March 2020 and you let it drop all the way from those highs all the way down to 10 cents. You're basically just this far off what you initially bought in at, right? So it's not a big deal. If you feel like you missed out in March 2020, forget about it. Get it out of your head. Move on. Make some moves that can get you back in gear and then learn the freaking waves, right? I'm going to do 50% off my program and I've jacked the price up already to what the true value is. But because of this, I'm going to slash 50% off until we break the magenta line. As soon as we break the magenta line, that deal is gone forever. That's it. But I feel like maybe some people want to learn how to read the waves tonight. But it's up to people to watch this video even after it's done recording live. They can make up their own minds if they want to, because really what we're seeing here is literally the beginning of a massive move up in XLM. Massive, massive, massive move up in it. If you thought you missed out on Bitcoin back in 2012 or 13 or 14 or whatever the hell, right? Are you one of those people who thought that? Well, I used to think that. I used to think, oh shit, I missed out. What do you do, right? Well, look, if you don't understand that this ain't done yet, you won't understand what I'm saying to you right now. It doesn't mean shit what I've said before. It means what I mean now. So you either understand what I'm saying or you don't. You either understand that you're either in it for the long run to make real money, or you're just one of those people who want me to tell them, oh, you should sell it at $3.50. $3.50, right? $3.50, mate, $3.50. No, don't think like that, right? Now, a lot of people don't like when you tell them, invest for the long term, or hodl. Normally, I would say that's not a good idea, but because of this latest analysis, I will be one. I will be one as long as the trend is my friend. When the trend is no longer my friend and I see an opportunity to sell, I will do so, but we are nowhere near that yet. Nowhere at all. When I see the end of wave 3, I'm going to have to counter wave 4, aren't I? Right? Before I counter wave 5. So why would I even consider selling before I've even seen a wave 3? It's stupid, right? The wave 3 could be crazy long. It could be the biggest wave 3 you've ever seen in your entire life. How do you know? You don't know. So why would you try and assume something that has no measure? You can't measure that, right? And that's the type of thing that I'm talking about. But before we get there, you have to understand that there's potentially a hurdle in the way that's going to prevent you from getting there now, but you can get there still, and you could also increase your XLM if you follow the right procedure and if you follow a couple of steps that I've outlined already, right? Now, you either sell it where it is, or you sell it at least 50% retracement. But like I said to you, this thing could go as high as the red line, right? Now, the key here would be how weak it looks. If it starts to look weak like this, and this one was sharp, then you know this is a dead giveaway. This is not going to continue higher. But I always advise you to put a buy at the top, just in case. So therefore, you're safe, just in case, this whole thing was wrong and whatever. But I don't think it's wrong, and you will find out. So without saying too much more, let's see what people have to say, and then we'll wrap it up. What do you reckon? Johnny P, I would probably agree with you there. Okay. Now, it depends on your knowledge of the waves. If you don't know what the Ariaswaves are, then it will be hard for you to understand why this is a real potential to happen right now. If you do, then you do. You don't, whatever. Myself, I'm probably going to wait a little bit longer and sell it a bit higher. No problem. I am happy to sell. I'm happy to tell you my thoughts, but I also understand the waves a lot better than most people do. And as a precaution, it's not a bad idea to set like a sell order at somewhere around for example at the lows or a bit higher depending on how crazy you are. Just for insurance purposes, you could set a sell order down here somewhere, or you could just wait until it moves up and then sell, and then when I say sell, I mean convert to USDT for Binance, because there's no USDC. If you can do it to USDC, go to USDC. It doesn't really make a difference either way at this point in time. I don't see a problem with either of them, even though people like to talk a lot of trash talk towards certain things. Well, they still exist and nothing's happened yet. So once, it's only for a limited time that you would be in that stable coin, because then you want to be back in the actual coin. And once you're back in the actual coin, you may want to put it in a separate wallet. just for safekeeping, unless you really trust the exchanges, that's fine. I mean, what could possibly go wrong, right? Yeah, so I mean, at the end of the day, it's just about knowing that this is a potential. So keep your eyes peeled. Use your common sense as well. Now, I've already given you the Ariaswave vision of what, I mean, if you go above the high here, it's going higher. But if it doesn't go above the high, it's going lower. If it goes above the last low, it's going lower. Do you want to sell it? Do you want to buy it? I mean, look, the safest way to do this, in my opinion, is to go as high as possible using a measured move or a count, maybe even 0.786, no problem, right? Sell that, put a buy up here in case you lose about 3 or 4 cents, right? And then the trade-off is, if you're wrong, then you get tripped back in 4 cents later. If you're right, you get to buy it lower. That's all. If you don't care at all, just let it go down. It'll pop back up. Don't worry. You'll just have the same amount of XLM you have now. That's all. There's no big deal. Okay. It's only for the people who care about increasing the size of their bags. If you don't care about increasing the size of your bags, you're not greedy, you don't care, whatever, or you got cash, you want to buy low when it goes lower, go ahead. It doesn't really matter. All right, guys. Thank you for joining this important update. I will be updating you on these across TradingView and YouTube shortly, and also for my members, we'll be providing you with more in-depth updates as well. So just keep trusting the process, that the waves are in control, and Ariaswave is definitely a good way to look at this, because it really gives you a perspective that is unlike anything else out there, I truly believe. You're welcome, guys. Thank you for joining, and I hope you have a good evening, good night, good morning, wherever you are, and I'll catch you very soon.